SD Bullion. SD Bullion has just launched Survival Food, headlined by the only 100% organic, GMO-free survival food. Prepare like the doc. Purchase your survival food from SD Bullion today.
Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban tailings mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Well, Eric, Thanksgiving is come and gone, and we were worried or anticipating about a possible smash in the metals, and thankfully that hasn't materialized. Friday here, silver was actually up about 40 cents throughout all of COMEX trading. It had cleared $20. It's being pushed back down under 20 here in late afternoon access market trading. Gold also up here on the day and Friday, and it's clinging above support at 1250. It had reached as high as 1255 earlier in the day, clinging to about 1251, just above 1250 here today. Closing the week on somewhat of a positive note, back above previous support and now what would be considered technically resistance levels of $12.50 and $20, and pretty big round numbers as well. So that's at least somewhat of a good sign to be closing the thinly traded Thanksgiving holiday week here above those support or resistance lines.
Yeah, and December was always going to be a big month, and so it looks like traders are positioning in advance of that and not willing to bargain for a couple dollars on the downside versus the possibility of having some kind of return to the mean with gold and silver moving higher. We did see some pressure on Wednesday, following that algo trade that I spotlighted in the article that I wrote. And that article was instructive to people who haven't seen that algo on an ongoing basis. But whenever you see that pattern of the upside being capped by the day's previous tracing out pattern of price over time, it is a signal, and it did show that the powers that be were executing a capping algo pattern on that trade. And we dipped down later in the day into the access market on Wednesday, but ever since then it looks like there really isn't a lot of incentive to move the prices lower. So for that reason alone, it looks interesting as we move into the December's trade, because you have to wonder whether, at this point, the bottom line when it comes to manipulation, particularly when it has been going on for as long as it has, and inventories in the COMEX vault and the LBMA vault are as low and have had depletion as much as they've had over these last few months, comes a point when a cartel will have to stop and say, do we want to lose more gold? Because that's part of what is the process that enables them to keep prices lower. Because at some point when people do stand for delivery, they have to be met with physical gold. So bottom line is, we may see lower prices, one never knows, but I kind of take it as a hopeful sign that we weren't obliterated out of the water in the last 2 days.
One of a positive note here for gold and silver investors. And that comes interestingly on a day here today on Friday when Bitcoin has passed the price of gold for the first time ever, temporarily early overnight hours on Friday. Bitcoin hit a high of 1241 or 1242. I'm sorry. At the time, gold was trading at 1241, so cleared it by $1. Gold's back above it now a little bit, but quite a move for Bitcoin. Even in the last month, I think beginning of November, it was trading around $100 or $150, and now here we are November 29th, the end of the month, and it's trading higher than 1 ounce of gold. And Eric and I were discussing before the show that it's definitely possible here that Bitcoin has a lot further to go to the upside, but it definitely is in a speculative mania right now. We're likely looking at least a half coming up, similar to the one earlier this spring, and there certainly could be numerous more crashes as the electronic currency, continues to gain market share.
Yeah, and mind awareness, and the most important thing to keep in mind when it comes to Bitcoin is that even at the price that it's at today, the market capitalization has got to be somewhere in the neighborhood of around 10 billion or less. I haven't looked it up in the last week, and given how fast it's moving, I'm probably way off. But bottom line is that relative to the Forex market, where trillions trade in any given day, I mean, no joke, I mean, it's the biggest market in the world, Bitcoin is like a grain of sand, and there's so much money in our now bloated fiat system since 1971's gold window being shut, and the hyper leveraging of our global economic system to the point where capital is gigantic and Bitcoin is tiny. And believe it or not, folks, I would not be surprised if Bitcoin was 10 times more than what it is in the next 2 years. But at the same time, you'll easily see maybe 10 occasions where it gets cut in half along that road. And then on top of that, clearly at some point, governments are going to be paying a lot more attention to it. And they might be aggressive when it comes to manipulation and regulation and so forth for fear of the currency basically being a route of escaping from the financial system. They pay a lot of attention to gold for that very reason. And gold is a much bigger market than Bitcoin. When Bitcoin grows up and becomes a significant ability enabler for capital flight, the U.S. government in particular is going to go after it, even though they may seem to be sending signals now that recognize it as a legitimate currency, but they only care minimally about it because it's a tiny minnow. So it'll definitely be interesting to see how it develops over time. It's going to be a very political currency.
Exactly. The other interesting thing along that line, or along those lines, a lot of precious metals investors are somewhat wary of Bitcoin as it's just an electronic currency. You can't hold it in your hand. It's not backed by anything physical. Tagging on the success of Bitcoin, I think just this week, Douglas Jackson, the founder of eGold, which had been shut down by U.S. authorities, I think 5 or 6 years ago, they accused him of money laundering the gold currency. He's launched a Bitcoin-like technology that's going to be backed by gold. So obviously, it's still in the very early stages, something to potentially look into for those who are interested in electronic type currency, but really want something backed by gold. Although there are quite a few cautions to think about if you have something like that, as theoretically, even if an electronic currency is backed by gold, that you kind of set a target on your back for the authorities in whatever country or jurisdiction that vault is held in to go in and seize that. I think you definitely put a bigger target on your back than just something like Bitcoin. But it'll be definitely interesting to see how that does, if it does catch on and can piggyback on the success of Bitcoin and perhaps even improve on a little bit with actual physical backing of gold and with that.
I haven't looked at it yet, but you know how they deal with the supply? Is it something like where in Bitcoin you can actually electronically mine per an algorithm and create a greater supply of Bitcoins available on the market? Is there something similar to that in this new Bitcoin-style e-gold?
I haven't studied it in depth, but it was announced as a Bitcoin-like technology, so it sounds like it to me that it's going to be something that's mined, and I'm not exactly sure the details of how they're going to go about then of acquiring the gold to back it. So it'll be interesting to see and look into more and see whether that can take off and piggyback a little bit on the success of Bitcoin, which is really exploded in not only price but also in demand and use throughout 2013. Even 6 or 12 months ago, the number of retailers who would accept it was quite a bit lower than there is today. I think there was quite a few dozen retailers who are advertising Black Friday sales as accepting Bitcoin today, and certainly that wasn't the case last year in 2012. So.
And the link-ups to the international banking system have been expanding a lot too. ATMs and bank account liquidity and all that good stuff that helps Bitcoin around. So we'll have to take a look at the other currency system and report back.
All right, so getting the focus back towards the metals and silver a little bit, we've definitely seen a tightening on the supply side of the silver market. We've let readers or listeners know, 2 or 3 weeks ago, the Mint announced that they'll be shutting down production on 2013 Silver Eagles on December 9th. And as we anticipated, premiums have started to rise. They've jumped probably about $1 an ounce since then. Even just today on Friday and Black Friday, suppliers raised prices once again. And this is while they're still producing the 2013 Silver Eagles for another about 10 days here. So we've already seen about $1 jump in premium. So it would not surprise me at all that come mid-December, once the 2013s are sold out and the mints totally shut down production for 5 or 6 weeks, that you're going to see $5, $6, $7 an ounce premium on Silver Eagles, and that's going to start to spread to the other products. Probably first the Canadian Maple, and then even the generic rounds and bars. As when you step back and look at it, the sales for the first 11 months of the year are closing in on 42 million ounces. So 4 million ounces a month of silver sales, and traditionally December is a higher than average month for the year. So 4 to 5 million ounces of silver demand for the Silver Eagle product is going to have to be shifted to other products. So just a natural supply and demand phenomenon. We're going to look for premiums to rise across the board in the other retail silver products, and availability to decline. We're already starting to see that. The Sunshine Mint, which is the mint that produces the blanks the U.S. Mint uses for the Silver Eagles, they're now, I think, 4 to 5 weeks on a delay. Even for their 10-ounce bars, they're about 4 weeks out. 90% silver is pretty much sold out across the board, all suppliers. Again, there's maybe 1 or 2 that have 1,000 or 2,000 face in stock, but it's really nothing in the big scheme of things. So, while we're not the level where we were in spring with the big smashdown yet, as far as Eagle premiums and supply shortages and premiums across the board, particularly if silver hangs around $20 an ounce or below, combined with the U.S. Mint shutting down, would not be surprised to see shortages again creep up and spread out from the Silver Eagle to the other retail products. So we'll keep an eye on that as well. And the other thing with gold breaking down below 1250, big money is coming into the gold market. We've been contacted by several different clients who are each looking to put $1 to $2 million a week into gold, and these are new investors to the gold market. On the wholesale side, really for the first time in 2013, a lot of the wholesalers are letting us know, while premiums aren't jumping too much yet in gold, the market is very tight, and probably the tightest it's been on a retail side for 2013 in gold, even tighter than when gold dipped down under 1,200 back end of June, early July. So really both the gold and silver markets are starting to show early signs of a retail shortage and premium spiking. And whether we see a continuation and acceleration of that will largely depend on the paper futures markets, whether they try to keep the metal below 1250 and 20, or give it some room to run and try to cool off demand a little bit. So we'll keep our eye on that as well.
And there's been a long line of investors who've been in the market or looking at that 1250 line and $20 silver as trigger points for their decision to buy even more. And then new people coming in of big money. It's not surprising at all, because the assumption being that the lows of June 28th would hold. And if somebody looks to accumulate and put in another new batch of orders for their existing stash, or new people coming in, it's pretty common for them to look at those technical signals as the point to buy. So it's encouraging to see that, in fact, today we did touch over 1250 and over $20 on silver, because the price speaks volumes, so to speak. The proof is in the price. Those people are there stepping up to buy, and combined with the fact that the cartel doesn't seem super enthusiastic about going very aggressive in their selling patterns to push prices down, primarily, most likely, because of all of the gold and even silver at this point that has been flowing eastward into China and Russia, etc. So maybe December we'll see some stability, and then we'll move higher. But time will tell. You never really, at this point, can tell because, as Bill Murphy Gata has been saying for months, we used to have a 12-year some odd pattern of a controlled rise where the cartel would manage prices, but they'd let the steam come out and prices rise just to have a controlled appreciation that wouldn't attract a huge amount of attention, and it was the quietest, longest bull market in gold in 100-plus years. And now, within the last year and a half or so, we've seen them in hyper-aggressive mode, which just speaks to the fact that behind the scenes, the economic system is creaking. The monetary system, even more importantly, is under an enormous amount of change and pressure. And the reserve status of the dollar and trade status of the dollar will continue its evolution to maybe a 20% role in the global system as opposed to 60 some odd percent today.
And really from a long-term perspective, stepping back and taking a look at the long-term charts, particularly gold, it still is right where you want to be. And really the fact that we've had a really prolonged correction here, it's been over 2 years now in gold and about 2.5 years in silver. It sets up a strong launch point for the next move in the bull market. When you step back and look at the long-term bull market chart, the last real breakout for the big move in gold was after it consolidated in, I think, the third or fourth attempt through the 1,000 level. So even at 1179 low, it's still quite a bit of a higher low than the last low in consolidation. So even if it were to temporarily break that and dip down below and head towards 1,000 temporarily, it really wouldn't be hurt too much from a technical standpoint. But the fact that it has the last 2+ years have been the longest correction consolidation phase in the bull market. Number one, that it's kind of a natural phenomenon on the heels of it was the longest on both on the price aspect as well as the time length that moved from really when gold broke out above 1,000 and ran without a big correction all the way to like 1915. So when you have the largest move both on a time scale as well as a price wise, it's natural to have a longer correction or consolidation phase. But that really from a long-term bull market perspective, that's healthy, and it sets up a base or plateau for the potential for the next big move to come here into 2015 to 2017.
Yeah, and we're also trading right about the cost of production for both gold and silver. And a lot of gold that will be coming to the market this year are the product of mines just being pushed to the limit to be able to get some cash flow to keep some of these companies from going to the capital markets, because they're scared to death of doing that because the reception they'll receive will give them poor pricing on any deal that they might need. So, and CPM Group is making a big deal about, we're going to have a jump up in some mine supply this year. But the fact is that where that happens at any particular mine, more often than not, it's happening because they're high grading and attempting to make the best of the deposits that they have because the economics in the marketplace stinks now, and that only steals from production in years further out. So that actually is an analogous kind of phenomenon to what I was speaking about before when it comes to the gold cartel losing a lot of their gold to keep prices down. Well, in the mining industry, you're having shut-ins, you're having mines high grade, which steals production from future years. So all of these distortions that have been introduced by pushing gold and silver to much lower prices will come back to bite the hands that are attempting to get prices lower. And you can't defy gravity forever. Right.
One other thing I wanted to discuss here, particularly as over the next couple of weeks, I expect the Fed's MOPE to ramp up markedly ahead of the December FOMC meeting, which will be Bernanke's last before Janet Yellen comes in. I expect the MOPE to be loud and proclaiming a taper, and whether the Fed does or doesn't announce a nominal taper in December, attempts to save face and allow Bernanke to say he started taper before he left the Fed, and anything that happens after that, that's Janet Yellen's fault. So regardless of whether they do announce a nominal 5, 10, or 15 billion a month taper, don't be surprised at all if by December of next year, Janet Yellen's Fed is doubled the current pace and they're buying 150 billion a month in treasuries and mortgage securities. Especially with everything with Obamacare, the healthcare sector is in the process of being totally decimated by Obamacare from an employment perspective. Being in the healthcare industry myself, I'm getting a pretty good look at it, and you're seeing massive layoffs across the entire health field sector. They're in progress right now throughout the end of the year, really before Obamacare goes into effect January 1st. ProMedicare is the corporation that basically has a monopoly on all the hospitals and healthcare systems here in Northwest Ohio, and they're in the process of laying off, I think, approximately 2,500 or 3,000 healthcare workers by the end of the year, just in Toledo alone, which is a pretty moderate or small-sized Northwest Ohio city.
You know what's amazing about that, too, is that at the same time, the only segments of the medical system growing really well from Obamacare is Medicare. All the people signing up, for the most part, on all of the exchanges are Medicare people.
And these are all high-paying jobs. I mean, you're talking mostly nurses and physicians that are getting laid off in droves. And, I mean, it's happening across the entire country. And when you have a healthcare system that pretty much has a monopoly on all the hospitals and healthcare systems across an entire region, really, and they lay off 2,500 or 3,000 nurses or physicians, a large majority of them, they're not going to be able to go anywhere else to find a comparable job because there's just basically an employer monopoly, and there aren't 2,500 other good-paying or high-paying healthcare jobs in the region, and it's not like you can move anywhere else because it's happening across the country. So from a healthcare employment perspective, Obamacare is shoving the economy off a cliff, and really, I think that Janet Yellen's Fed is going to have to respond the only way it knows how, by massively increasing the rate of QE over the next 12 to 16 months, or 12 to 18 months. So,
or we just have a full-blown currency war that leads to a currency reset. And if you have a full-blown currency war, given what China might do or what have you, then it could happen at a fast timeline and surprise the heck out of everybody. I mean, you know, this window of today through 2020 is basically when we're going to have that currency reset, and we have no idea when it's going to happen. But there is a scenario where it can happen really quick, and all of a sudden in mid-2014, the dollar gets devalued by 30%. They roll out an SDR-backed currency basket and all this other stuff.
The timeline could even be accelerated if China doesn't stop down its escalation in rhetoric and attack Japan over the weekend. It's almost scary how fast China is escalating over Japan, and I mean, U.S.
definitely flexing their muscles.
Right. It's hard to believe that they would attack Japan, but they certainly aren't taking a pacifist or compromising role at all. They're playing a pretty hardline stance and not shying about escalating. So yeah, something like that obviously would be a black swan that could throw any timelines out the window right there. So again, we had silver hanging around $20 an ounce to close the week, just pushed down a little bit under it here in the access market in the afternoon trading Friday. Gold clinging to support at $12.50, but really positive trading throughout Friday's, well, I guess Thursday's international trading and Friday's Globex trading as well. So we didn't have the big cartel smash that we anticipated could be possible, so that's something to be thankful for. So we'll keep an eye on that throughout the next week as traders come back to the market with the Thanksgiving holiday past. And again, look for the Fed to start ramping up their mope rhetoric that they're going to announce a big taper at the December FOMC. So be prepared to see that all over the news wire. So we'll wrap things up there. Once again, for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
And hope you all had a great Thanksgiving.
Right. Can't forget that. Thanks, Eric. Hope you all had a great Thanksgiving and a good time away from the markets and some time with your family. So
get some sanity.
Exactly. So thanks again for tuning in. We'll catch you next week.
SD Bullion.